Well, it's August 2011 in Fulton County, and that means that we are starting to receive our tax bills for 2011. If you sold a property in 2011, then you probably received a tax bill for the property you sold. It probably was forwarded to your new address. In that case, you're going to want to forward the tax bill to the new owner so that they can pay the taxes for the year from the date of closing through the end of the year. Now, at closing, your taxes were prorated on the 2010 tax amount. So if 2011 taxes ended up being higher or lower than the 2010 tax bill, you could end up owing the new purchaser some money, or they could end up owing you some money. It's called a reproration of taxes. If the taxes were off, then one party could owe the other party a little bit of change. And here's how you would come up with that. Just take your new tax bill, divide it by 365 days to get a daily tax rate, multiply that times the number of days from January 1 through the date of closing, and make sure it's in line with what you paid on your prorated taxes at closing on your settlement statement. You can be able to see exactly what was paid at closing. It's on the right column, the last paragraph down. It says city taxes and what taxes were prorated for. So if that number is higher, then you may end up owing the new purchaser something. If that number is lower and taxes were lower in 2000 and you overpaid at closing, then they may owe you some money, but you have to work that out with the new owner. I hope that information helped, and if you have any questions on whether or not you owe the new owner some money or they may owe you some money, call the closing attorney who handled the transaction, and they'll be happy to help.